All right, my friends, we're back with a new video today, and it's all about mortgage and lending and financing. And how do we do that? Well, we're going to talk to my good friend Dion Beg right after the intro. There we have it, my friends. Yes, I'm Gary McGowan. That's Dion Beg. And who's Dion Beg? He is one of my favorite mortgage brokers in all of the land. That's right. Dion, how are you, my man?
I'm great, Gary. How you doing?
Excellent, excellent. Okay, so we should probably introduce you, do the proper introductions, and then we'll get right into some stuff. So Dion, I've used Dion for many, many years. My clients have as a mortgage broker. Tell us a little bit about you, Dion.
Sure. So I've been, I guess, arranging mortgages in Canada for about 15 years now. But prior to that, I spent most of my life in Australia. In Australia, I was actually a real estate agent and a financial planner simultaneously. And back there, we were effectively helping people create financial plans using direct real estate ownership, which was not a very common thing. And when I moved to Canada, I saw massive opportunity in the market here to educate more people on how to do that. 15 years ago, while property investment is kind of the talk of the town for the last 5 years, 15 years ago, it really wasn't a huge thing. And we've basically built our business on the idea that if we can just educate regular Canadian families on how to best use their financial resources to create a better future for themselves using real estate, then they might end up with a better outcome than they would get if they went with a more traditional plan. And we've helped effectively thousands of Canadians become millionaires or be on their way to millionaires. So that's what we sort of work in on a day-to-day basis. And of course, that all starts with your first home. So we do help people set up for their very first purchase. But when we set them up, we always set them up with a view to the next purchase after that. So it's more of a consultative planning service with our clients than just a sort of a one-time transaction.
I like it. And one of the things I wanted to talk to you about is this is somebody that's not only helps create financial plans and helps people buy investment properties and teaches that, you're kind of living a really cool financial plan. Let's just touch quickly on whereabouts you're living at the moment.
Yeah, sure. So look, as I said, I run my business out of the Greater Toronto area. But in 2020, when there was an opportunity there was an opportunity for us to take advantage of a remote workers visa. And so at that time, we took that opportunity and we effectively moved to Barbados. So I spent a bunch of my time in Barbados as well as back in Canada. But right now, I'm talking to you from my home in Barbados.
I love it. I love it. And here's the cool thing is Dion, not only does Dion, live and breathe, the lending environment and real estate, he walks his talk too, which is incredibly important for his clients and my clients as well. So let's talk a little bit, Dion, about what's going on today in the Canadian mortgage world and in the real estate market. Of course, we typically focus on Ontario and the Toronto area, but there was a big announcement yesterday of much to do about nothing, perhaps. Is that right?
Well, and nothing is a hell of a lot in today's market, actually, because after the last year that we've had, where it's been interest rate increases and not small ones, 1% jumps overnight, and a real shock to the Canadian consumer and the Canadian economy. These last couple of months of no news have been great news.
Yeah,
what I want to say too is they announced in February, when they did a small rate increase of 0.25, that their intention in March was not to raise, right? And they actually followed through with that. And that there was the first period of time where I think the Canadian consumer, who was somewhat hurt by the government and the Bank of Canada, actually had a reason to believe that the government was actually going to follow through on something that they said. And that hadn't been done for quite some time, because a lot of people, 2 years ago, Gary, your clients, my clients, we took variable rates because we were told one thing, that the Canadian economy was doing well, that interest rates would remain low for at least another couple of years. And the government quickly changed tune on that last year and effectively broke somewhat of I guess, not a firm promise, but broken, away from a formal announcement that they were going to keep rates low. So it's kind of nice to see them following through on some positive things.
Yeah, well, and that's the beauty of it is, in a sense, no news is a lot of news, and being able to understand that, and as you do so eloquently and well for your clients, is be able to peel that onion away to really, what does that mean for us as the end user at the end of the day, right? And when there's news like that comes out, or when there's different people that have, there's lots of voices in our ears, right? Especially if you jump on Twitter and you kind of get down the Twitter feed, and some feeds are, there's so much happening on the negative side of the real estate market, but there's also some positives, right? And talk to us a little bit about the positives and the fact that some of those fixed rates perhaps are coming down a little bit, and what sort of products are you showing, or you're not to say you're getting, what sort of products are you sharing with your clients at the moment?
Sure. So yeah, it is true that in the last couple of weeks we've seen, I guess, a consistent trend where rates are slowly coming down, both on the variable side and the fixed side. If we go back to a couple of months ago, it was likely that most people were getting rates well into the five, and some into the 6% range. Now we're getting rates below 5%, in the mid 4% range, and upwards from there, depending on if it's an owner occupied or rental or those types of things. Now, are these rates fantastic? Well, it depends on perspective, right? So I told you earlier that I moved here from Australia 15 years ago to Canada. And at that time, when I left Australia, interest rates were around 7%. And when I came to Canada, they were around 3.5%. So I went, wow, this stuff is cheap. So when I now see where rates are, I'm like, okay, I've been here before. Many Canadian consumers may not have been here before as mortgage holders or people trying to buy into the market. So the first thing I want to say is, yeah, these rates are higher than what we've become used to, but they're not much higher than, say, the 50-year average in this country or any other sort of major G7 country, right? So that's the first thing to say. But then we are all faced with the reality that whatever those rates are, we have to face a monthly payment. The monthly payment is the thing that people really need to focus on. Whether the rates are here or there, that's it. You've got to face that reality every month. Now, affordability has become a little tighter, as you can imagine, with prices where they are and rates where they are. But if I go back 12 months, Gary, we were at a peak where, let's say, I'll use a ballpark number just for example's sake. Let's say a house that 3-4 years ago was worth 800 grand had increased to $1 million in value, right? And that's, say, where we were last year. And at that time, interest rates were around 2%. Now, since then, interest rates have jumped and jumped and jumped and jumped, right? We're stable now, but seriously, we've had some, eight rate hikes. But as they jumped, those prices that reached the million slowly came down and down and down. Now, maybe not all the way back to the original 800, but maybe down to around the 850 number. And so what's happened in the last 12 months, and you've seen this in your business, and I've seen it in mine, consumers have been sitting there going, when should I buy? Is now the time? Our price is going to drop a little more, and our rate's going to go up more. And then what does that mean for my monthly payment? And rightfully so, these people have just sat there and said, I can't make a huge financial decision right now in this environment, right? Where we are right now, though, is number one, prices in many areas have stopped dropping. And in fact, multiple reports across multiple regions, prices are actually ticking back up. So, the question is, where's the bottom? Now, I can't say that we've reached the absolute bottom, but for the last 3 months in a row, prices have not dropped in most areas, and in fact have ticked up a touch. The only time you've reached the bottom is when you actually start to go back up, and you can say, well, yeah, the bottom was last week or last month. Now, 2 or 3 months don't make a long-term trend. But number one, prices seem to be stabilized. Number two, interest rates are a little bit lower. And for that reason, this month in particular, we're seeing a lot more activity from our clients, our realtor partners, reporting, again, multiple offers, our clients calling us saying, can we go firm on this because it's a property we want, which wasn't required 3 months ago. You could get a conditional offer. We're back into that market.
Yeah. Well, and the interesting thing there, as I was thinking about what you're saying, yes, we definitely, I agree with 100% of everything you're saying. We hit that we hit a plateau. Let's not call it a bottom because we don't know until we're 6 months or 12 months out. We hit a plateau and now we're starting to creep back up ever so slightly. And at the end of the day, how do banks, how do lenders make money? And that's by lending out money on properties that people are buying or refinancing. And we've all felt it in all different industries or parts of the industries. I'm a realtor, you're a mortgage broker. There's property inspectors, there's lawyers that do closings. The less closings that are out there, the less money banks are making. So are banks, I'm leading to a question here, are banks still very stringent and have very strict policies on how they're qualifying people? Or are you seeing that loosen ever so slightly or providing perhaps additional features to the mortgage? Maybe that's a better way to ask that question.
The good answer is not really, no.
Not really. Okay, good.
Because ultimately, if we go back to 2008, global financial crisis, and we remember what happened in the United States then with loose lending practices. Basically, if you had a pulse, you could get a mortgage. It didn't matter how much income you made, how much cash you had in the bank, you got a mortgage.
Yeah,
Right?
we all seen The Big Short, right? If you haven't seen it, go watch that movie. It's
It's kind of
interesting.
crazy. Anybody could get a mortgage back in 2008 in the States. That was not the case in Canada, right? Canada had always a fairly stringent application process, qualifying process. Now, because of that, we recovered from that global financial crisis much stronger than much of the rest of the world. Where we are right now, I don't think we've really changed much in regards to loosening. In fact, tightening is the case, right? And when I say tightening, it's an effect of what they call the stress test, which came into effect a couple of years ago. And the stress test basically says, if this is going to be your interest rate, well, we're going to qualify you at a higher rate so that if rates increase, then you and your household should be okay. So they're building in a buffer the day you get your mortgage. And I will tell you, Gary, that buffer has really saved a bunch of Canadians right now. So as much as we and many people in the industry a couple of years ago were saying, oh, this stress test is pretty full on, we may not need it, it's in fact probably been a bit of a savior.
Yeah, yeah. And we definitely need that stress test. And that's one of the things that sets the Canadian banking world or our nation apart from others, of course. And we make fun of it from time to time and we get frustrated with it, but it's, as you said, it's important to our financial well-being. So what I'd like to talk to you about quickly is you, myself, and many others, but you particularly, you present a great opportunity and you teach financial awareness. You also teach the importance of creating wealth, which is really creating a future for you and your family. Talk to us a little bit about that. I know you've got something coming up real short or quite quickly here with a really good workshop.
Oh, yeah, that's right. So next week, that's Tuesday. And I think that's the 18th, Tuesday, the 18th of April, 7 p.m. I'll be hosting a live webinar where we will be talking in a little bit more detail about what's been going on with the economy, where we are now, and well, number one, what are first-time homebuyers doing to get in, and also what are homeowners doing to build their wealth even in this environment by potentially going out and buying that second home or second investment property.
Yeah, I like it. And if you're watching this and it's after next Tuesday, that's okay. Reach out to myself or Dion because he doesn't just do this once a year. There's many opportunities to jump on a webinar just like this one. But I've been a part of these webinars. I've been when we had them in person. I was there as well, and it is so informational and valuable to you, home buyers and sellers, that this is certainly something that you want to take part of and educate yourself from somebody that educates many, many people right across our nation. So that's great, Dion. Okay, some closing thoughts here. First of all, how do people get a hold of you? We'll certainly put that down in the show notes, but what's the best way for people to get a hold of you?
Sure. So the email address is Dion, that's Dion, at mortgagesbydion.com. If you could just Google Mortgages by Dion, you'll find our website. That's probably the best way to reach out.
Excellent. Okay, some closing thoughts. So today being April 13th, 2023, what are we expecting over the next couple of weeks, perhaps, with mortgages and financing? Is there some interesting products out there that people can jump on board with?
Yeah, so I mean, we've got, well, firstly, in terms of the market itself, we're going into spring market. And traditionally, spring market is where we see an uptick of listings, a lot more activity. That coupled with the stability in the interest rates for the last couple of months, I think is sort of the recipe for a very strong next couple of weeks and months. I'm sure you and your colleagues, Gary, are preparing to get a lot busier than you were. I've been speaking to a bunch of realtors who are preparing properties to bring to market in the next couple of weeks. So I think that's what we see in the next couple of weeks. In terms of mortgages and mortgage products, I would say contact us or your local mortgage broker and figure out what makes sense for you right now. Fixed or variable? Is it a 5 year that you go with, or is it potentially a 2 or 3 year, depending on your circumstances? A lot of our clients are seriously considering those right now as well. So it's very much not a one size fits all, never has been, but in particular now, it's even more so where we've got to work out what's manageable for you financially, what's the best product for you.
Excellent, excellent. And I will argue this, or not argue. I will get on the soapbox as much as I possibly can. Many people think that the realtor, people like me, is the first phone call that you make when you want to go buy, sell, or invest in real estate. And I will suggest and make a strong point, it's actually this guy over here. That's the first person you need to call. You need to know your buying power and what opportunities and what options you have. So make that call to Dion, reach out to Dion. We'll see everybody on the next video. Thanks, Dion. Always appreciate your time.
Thanks, Gary.